Hi guys, thanks for tuning in to another episode of Nuggets News, or our monthly Ethereum and DeFi ecosystem update. So, welcome back, Anthony. It's been an absolutely massive month for Ethereum. How have you been?
Hey mate, yeah, I've been good, and yes, it has. I mean, it's been one of the biggest months in quite a while, I think, not just I guess in the markets, but in development as well. So yeah, keen to get into it today.
Absolutely, and I've got the old Amisa Go t-shirt on as well for a reason today, guys. Even though the branding has changed a bit for them. Oh, I'll mention as well. You've got a little YouTube channel, so I'll link that down below. But everyone is just going full systems with the newsletters, and I mean, it's not a bad thing. The more Ethereum education out there, the better. So, what sort of angle are you going with that?
Yeah, so I guess some of your viewers would know about the Daily Grain newsletter that I already put out, daily newsletter about Ethereum, and I figured, I want to expand that onto YouTube and do like a daily video recap of everything that's happened within the ecosystem. So that's kind of the angle that I'm taking there. I want to do more educational videos and stuff there. I've never done video content before. And you're right. Definitely everyone in the ecosystem that's doing education right now is trying to expand it out as much as possible and just like put out as much content as possible because we're going to have like a bunch of new users coming in now that are going to be hungry for that sort of stuff.
Yeah, and I think we kind of touched on this last week. We've gone the NFT monthly episode as well because it would be too big for example you and I to cover, and then like a year or two ago, we didn't even really have Bankless or DeFi Dad, and now there's kind of like three or four of us, and there's still way too much to cover. We do our best in this monthly episode, obviously, but cool. Let's get into it all. We might start with the Amisa Go, the OMG stuff, because this one flew under the radar. So they've partnered up with Ledger to get hardware wallet integration. They've already got the Bitfinex and they've got the stablecoin stuff going on, which is very cool. And then they came out and announced they want to get this central bank digital currency sort of ready status as well. So did you see all those announcements?
I think I briefly saw about it. You're right that I think it flew under the radar. I didn't see many people talking about it. Yeah, if you wanted to expand onto it, sounds like you know more about it.
Yeah, I mean, I kind of feel the question we get a lot is, oh, what's going to happen with all these different layer twos now we're going to proof of stake? And I think like Raiden is one that people like love and then hate, and Misigo is kind of the same. I think they're all going to find their niches, but Vitalik specifically said this recently that he's more bullish on layer twos once we go to ETH2 because they become more powerful and that takes us to billions of transactions, and then you can basically do anything you can sort of on the internet and all these other apps in the real world. So look, I think that Amisa Go have gone that route of more enterprise and corporate at the moment, and it's the network effect. It's very hard when they've only got Bitfinex. They just need to get a couple of other exchanges, and I think they're pretty close to maybe getting like OKX, I feel, or Bithumb, someone like that. But then once they get Ledger, you got a couple of big exchanges and people can just go from their hardware wallet on a second layer. That's going to be awesome. So then all the big businesses and exchanges would start holding OMG and staking and having their plasma chains, and that's when it can just kick off all of a sudden, like we've seen with XDAI or there's been a few that have just come from nowhere, Loopring, which has been awesome.
Yeah, you're completely right. It's all about the network effects. If you've only just got Bitfinex on your layer, no other exchanges, then it's not really gonna do much. So I mean that goes for absolutely everything in the ecosystem, right? It's why Ethereum is as big as it is, even though it's expensive, right? To do things. It's just the network effects are worth it at the end of the day. You could put stable coins on other really cheap chains, but there's no network effects there, so no one really cares to use it. So that's the same with Amisa Go right now or OMG. They need to expand those network effects out and get other exchanges on board to actually get usage up, or else it's just going to be Bitfinex being like, well, I can't send it to anyone, so I'm not going to use it.
And do you have any thoughts on Raiden? I had a question last minute that one of the devs had left, but I mean, from what I've seen, I used their beta the other day, and it was really cool. It was easy just to add a coin, the same as you would normally use MetaMask and send a Raiden transaction. And I know they've got the X Stake wallet coming out that's got a built-in DEX, so there's still plenty happening at Raiden. But do you have any thoughts on that?
Yeah, I mean they're a project that's been around for a while. I think they've just been quietly building for a while now, but they do have competitors now as well with the ZK rollups like Loopring's ZK wallet. It's doing similar things. Targeting that kind of like a low cost payments use case and things like that. So I think as we keep going further and further and more projects pop up, it's just going to be harder for these other projects that you know have been around for a while, but if they're not doing any marketing, no one's really going to know about them, and it's going to be harder for them to get adoption, I think.
That's true, and that's a conversation I had with them as well. And then they were advertising for a new marketing manager, and I've got a feeling they want to redo their tokenomics like all the projects have from that era that haven't updated yet. So I still like Raiden, but always do your own research, guys. Anything else on the layer twos? I mean, I feel like I keep hearing XDAI and Stake just so often, and Loopring I just mentioned on Twitter just like an hour ago. I saw they've launched the Loopring Pay wallet, which is seamless. You don't even realize you're using a layer two. Very cool.
Yeah. Layer two still making a lot of moves. I think Synthetics is still doing their trial with Optimism, of course. As you mentioned, Loopring is doing a lot of actually really great work there. It's funny because last year I didn't hear about Loopring at all. Basically, people thought it was a dead project. There was nothing going on. And then this year there's been like a renaissance where they launched their layer two exchange. They have this wallet now. Their branding and marketing is so much better. And this is what I'm talking about, right? Because they got someone on board to do this, and they actually understood the power of marketing, they were able to basically come up to the top, and now they're considered like a tier one DeFi project. So yeah, there's a lot more like that. I think XDAI and Stake, I haven't really seen marketing for that outside of the community itself. So maybe that's why I think a lot of people maybe don't see more projects adopting it and things like that. And Optimism, I guess Optimism doesn't do marketing themselves, but the community does it too. So you have two arms here. Like if you can get a community to do really great marketing for you, it's like a huge network effect there as well.
Yeah. I'm having Austin Griffith on the channel soon because he's such a legend in terms of how hard he works, and he will be able to explain everything that's going on with that XDAI Stake sidechain. There was one other thing you mentioned there about marketing. So all of a sudden with Loopring, we see, was it called Rails that like build on top, and that is the protocol sync theory that the Bankless guys talk about. So when you get something that all of a sudden it's a great protocol, you'll find that others start to build on top of it, and it works its way kind of down that stack. And we've seen that so often now with projects that maybe went in a direction that they didn't think they were going to. Like Gnosis is an example of all of a sudden they've got two or three products built on top of their protocol that they never set out to even build. So there's plenty happening there, and I absolutely love it when you say they've just rebranded. All of a sudden they're just cool and it's working, and people still don't even know about it. Like people don't know that Loopring have a leveraged exchange on a layer 2 that you can sort of trade perps on. So very cool.
Yeah, exactly. And on that note of building on these kind of protocols, that's the whole point, right? Creating this neutral kind of like infrastructure for everyone to build on. Like Ethereum is at the bottom, of course, and then other protocols get built on Ethereum, and then above that we have other people building on top. And it's not even just going to be decentralized plays; it's going to be centralized as well, right? Where the centralized exchanges, some of them are already doing it, where they say, okay, we'll give you like a X% yield on your stable coins, and they'll lend it out for you, and they'll take a cut, of course, and all that sort of stuff. So yeah, we're literally rebuilding the financial plumbing of the entire world. And I think that's why it's just so exciting, right, to be in the Ethereum DeFi space for sure.
And that's why I've got my corny digital thick shake theory that I call it. But we are literally getting to that point now where the next step from a crypto exchange is a bank saying, you know what, like we're a small bank, everyone else is offering negative interest rates. Let's adopt this DeFi thing and offer our customers like 3%. And all of a sudden, again, it's no one wants to be first, then no one wants to be last. This bank gets all these customers, and it's just you can't stop this kind of genie that's out of the bottom now. And I think, well, not regulators, but I guess just like governments and banks have no idea that sort of concept could happen at any point now. Just like they didn't see this coming in terms of stablecoins, and now central bank digital currencies are being like rushed. So I just love how quickly it moves, and they just have no idea what's coming.
Yeah, exactly. And I think the end state for centralized exchanges and other crypto institutions is to be a bank, right? As you mentioned, they're going to still be the fiat on ramps, the completely regulated place where all the fiat goes through, and the government can monitor and all that sort of stuff, right? And yeah, definitely going to be offering similar services to banks as time goes on, as they lose market share to DeFi in terms of like being an exchange, like a trading venue and things like that. It'll probably take a while, but I think, if centralized exchanges aren't, setting up the infrastructure to become, crypto banks, they're going to lose out to ones that are.
Yeah, and that's where like Binance have gone really aggressive on the sort of global capture there. Coinbase have had a slightly different focus as well. But one by one, it's just getting harder and harder for them to compete as more and more things become DeFi rather than CeFi. That's probably the biggest announcement as well. Just the past 48 hours, a lot of people were blaming this for the sell off. We had this kind of rumor that they're going to be cracking down on the non-custodial wallets. So you won't really be able to have a wallet with your own coins unless you verify all your information when you go to send those coins off the exchange. Now, I think if you kind of look beneath the surface here, I get the feeling that Brian Armstrong was working really closely, and Coinbase kind of wanted like USDC or one of those regulated stablecoins to almost become like the US stablecoin, and a lot of it would go through them. They've also got heavy like focus and integration with all the DeFi stuff, but I feel like that kind of fell by the wayside with the Fed coin and the controller of the currency or whatever he's called. He left Coinbase now, and he's kind of working with Treasury. So there's a little bit going on there, and I think now he's kind of like, hey, this is heading in a direction that we did not want it to go. But I kind of said you can't stop this, so it's just whether or not they try to ban it and make things, awkward and bad for everyone, or if they realize that it's not the right thing to do.
Yeah, I think at this point they're in like the discovery phase of things. The regulators, they're still trying to work out how to approach this. And that's why we hear. I mean, Brian Armstrong's thread. I'm sure many people saw it about rumors that they're gonna kind of like not ban self-hosted wallets, so like your own crypto wallet, but make it really hard for you to withdraw from a crypto exchange to your wallet. You have to prove ownership of it, and the exchange has to believe you, and actually take that as proof that you own that wallet. And this would be quite disastrous, because that would mean that all your wallets would be tied to your identity. You would have zero privacy, zero anonymity, and then everyone could just track everything that you're doing, right? And if there's ever a data leak from any of these exchanges, yeah, goodbye your privacy, right? All your addresses are tied to your identity, and everyone would see that. So I think this is, whether this is true or not, he did say it was a rumor, but I think this is just a sign that they still don't understand the technology. And we see this play out in not just crypto, but like the internet as well. Like there's a lot of kind of talk about banning encryption, right? And it's like, that's just, it's so stupid that people who understand what it is, that it shows that they need education on this. I don't think it's necessarily malicious, but we need to educate them about this. And there's a few folks doing a good job here, like Coin Center is one of the most popular. They're always talking to regulators, trying to make sure that they understand what they're doing. Because if we don't do that, then the regulators are just going to do what they feel is the best course of action, and that could lead to disastrous results for crypto.
Yeah, and they have got that encryption ban law in Australia, as you say, which is it's just stupid. Like it's kind of saying that you're banning math, but for people at home that still don't quite understand what this all means, it's almost the equivalent of saying, well, we're still allowed to use cash, but now we're going to change the rules. So whenever you give someone cash, you've got to have their full KYC AML and keep a record of all that. And we saw the Liquid exchange, which plenty of us used when it was the only place you could buy Red Fox recently. They just had a data leak, and so for all I know, those documents are out there. So we're kind of lucky that we have good privacy and password managers and all that sort of stuff. But a lot of people probably don't, and they have no idea that all their stuff's out there. And plenty of the people in our community have now started getting all these scams targeted every day because they've got all their personal information. So yeah, that is another big tick that DeFi has over CeFi that people don't realize.
Yeah, and that's something I think gets overlooked often, is the fact that, it's not just about having no KYC and AML and avoiding, the government from spying on you or whatever you want. It's also about protecting your own data, right? And not having to give up your email, your phone number, your address, everything to these exchanges. That while, the bigger ones have good security like Coinbase and things like that, it's still a risk, right? There's still a risk that an employee could go rogue and just like leak everything and stuff like that. So I really think that people should be aware of that too. It's just like when you're using DeFi, you don't have to give up any of this information, right?
Yeah.
Yes, the privacy could be better because obviously on chain, if someone knows your address, they can see what you're doing. But if you haven't kind of like doxed yourself like that, you can maintain privacy relatively well.
Yeah, and our mate Raul from Real Vision was sort of tweeting yesterday that a lot of Bitcoiners and cypherpunks are still a little bit kind of kidding themselves that they think there's even going to be privacy in that going forward, and Bitcoin kind of wins from being like fully legitimate and regulated. But my argument is that there's already ways that you can be fairly private. These new upgrades that they're talking about now are going to add more privacy, and then on Ethereum you can basically make any ERC20 private now using Tornado Cash or a few of these others. So in some ways it's already there. You know, all the enterprises that are using the baseline software on Ethereum, you know, they're not just letting everyone see what they're doing. So I think there's kind of a misunderstanding there that there's already heaps of privacy on Ethereum as well.
Yeah, there definitely is, but I think what the problem is that people don't use it yet. I think most people don't have a reason to use it yet. In general, like, people who are privacy advocates, I think, the hardcore ones don't understand that most people just don't do it, right? Don't adopt these technologies. And that's not because they don't want to or anything, but it's also because it's not the default, right? If the default was private transactions, then people would just do it, right? Because they wouldn't change. They wouldn't be like, oh, I want everyone to see what I'm doing. The default is private. So if you're setting a transaction in MetaMask and by default it's private, then people will just leave it like that. But I think when we bake in these bad practices as builders, where we're saying, okay, it's not default private, then people aren't going to go out of their way to make it private. That's just the reality of things. And to, I guess, Raul's point, I mean, with Bitcoin, he may have a point in that a lot of Bitcoin, I mean, the Bitcoiners seem to really kind of like have a liking to these crypto banks or the centralized exchanges rather than doing stuff on chain. Maybe that'll change in the future. But you're right. There are tools that you can remain private on with Bitcoin, but they're even harder to use than the Ethereum tools, and they're not going to be tools that the mainstream uses at all. So yeah, the only solution, I guess, is as I said, making things default or like base layer privacy. But Bitcoin's never going to have base layer privacy, and neither is Ethereum. And I actually don't think it should for a number of technical reasons. But yeah, it's I mean, privacy is not just limited to crypto. People on the internet leak all their information all the time because it's not the default, right?
Yeah.
And it's just something we need to work on, I think.
Yeah. I guess I just want people to understand when you hear people saying, "Oh, they'll never allow privacy on Ethereum." It's like, well, it already is. It already is there. But moving on. So a few cool things that I've just seen come out this month. So I saw Catnip, which is like a kind of Uniswap like interface for prediction markets, which is cool. I'll have a read through my list. Have you seen any other new things pop up that have taken your fancy, Anthony?
Well, on the prediction market side, we actually saw them get a lot of use because of the presidential election, right? The US presidential election. So, as you said, Catnip's this interface on top of Augur. It's kind of like Uniswap, where you can buy and sell shares in a prediction market. We had Polymarket as well, which is another prediction market platform, which is quite cool. And these actually saw record-breaking volumes and interest because of the fact that it was something that people actually cared about tracking, right? And we saw that these prediction markets, as the results kept coming out about the election, they were swinging wildly, right? You had like Trump up at like 80-90% to win at one point, and then after Biden won some key states, he like dumped and like Biden went up, and we saw it play out in real time. And I actually thought that was really cool because it was like just a normal market, right, where you see the prices of different coins react to different news that's coming out over time. It's the same thing with these prediction markets. You saw the in real time traders betting against each other, right? And you could have made a lot of money if you thought that, wait, no, I think that Biden's going to come back from this loss because of the mail-in ballots, right? That's what saved Biden and got him up in the votes. So if you were smart enough to think that, you could have made a lot of money betting against all these people who thought that Trump had this really high chance to win.
Yeah.
And I thought that was really cool to watch play out. And like, I think Vitalik tweeted about it as well. And he said that the prediction markets were actually better than the polling, right? Because a lot of the polling was wrong again. And people were like, well, why do we care about polls? Let's just use these markets. So I thought that was quite cool.
Yeah, I think the other way to look at it is a lot of the time with these little niche markets, it's very hard to get liquidity for these agencies. It's kind of a binary yes or no before the event. Whereas once we get them kind of like peer-to-peer and just decentralized, they're the live markets, and you can see it flow back and forward, and it's a way tighter spread because there's no middleman trying to take a cut. It's almost like an option because it settles to the result rather than getting like bookie odds as well. So there's so many things that are maybe not possible. So it's expanding rather than just replacing what's happening in the real world. And we'll get to the point where, well, we did have this in the past on Augur, but it just didn't really ever catch on, where I could make a market. So I could say, hey, I think ETH's going to be over $1,000 at the end of the year. I'll give you, 50-50 odds, and here's the money. And other people can come in and say, whoa, I don't think that. And then the odds kind of change. So all that stuff is kind of possible and there, but we just haven't had anything that's caught on yet. So.
Yeah, I think the problem as well with Augur is that it's very expensive to create a market on chain on layer 1 Ethereum, and I know that they're moving to a layer 2 kind of solution now.
Yeah.
Polymarket is already on layer 2. They use Matic in the background.
Yes.
So that's another thing as well, is that people were able to trade like seamlessly instead of having to pay these high fees and everything like that. So that's just, that's just an ecosystem wide thing. But it was cool to see that it was ready for this really popular market, which I think is probably one of the most popular markets you could have, right? The US presidential election. It's a pretty interesting market.
Absolutely. One other thing we'll get into that was very controversial was what happened with the Ethereum minority fork and the Infura node. So for those that don't, understand how this all works, some people run their own full node and you keep a copy of the whole blockchain on your hard drive or whatever. Miners obviously would be a node that would keep a copy of that. Other services like MetaMask up in our browser here, or for example, even some of these exchanges were relying on others. So kind of using a program or a service as their node, so to get the information about the blockchain. And they might have been using a slightly old version, which is what ended up happening here. And then they weren't in sync with the newer versions, and so the old ones keep mining another chain, and then you hear all this FUD on Twitter about, Ethereum has split, and it's kind of true, but it's kind of not. So this was, it's kind of good, and I like when these things happen because you always learn from it, and we improve for next time. So, and it's better that it happens like this than a big disastrous way for things to happen as well.
Yeah, so I guess this is a technical subject, so I'll try to keep it high level with what exactly kind of happened, because we don't want to get into the weeds too much. But yeah, you're right, where it was basically, yes, a kind of like split in the network happened, but it was from a minority kind of like infrastructure perspective, right? Most of the network was still on the correct chain. There was just some I guess like exchanges and some infrastructure providers like Infura that split off onto the old chain because they were running the old software. And now the reason why this happened is because in the updated software, there was actually a bug fix that was put in that actually was a critical bug fix that people needed to upgrade to. But that wasn't widely circulated. It wasn't said, this is a critical fix for this bug, update now, because the developers or the core developers were scared that someone would exploit this, right, before people had time to upgrade, which would have actually resulted in a worse situation, because if people hadn't upgraded, then most of the network would be on the exploitable version. It would have had like a bigger issue. But this is what and to your point about how we learn from these things, I actually think that was the wrong approach, not telling anyone. I think they should have at least told these large infrastructure providers about it and said, hey, you need to upgrade because of this, right? Rather than, doing a full public release. So they could still maintain that security, but also give, the large providers time to upgrade their infrastructure. Because it's not simple like me and you clicking a few buttons on our PC and upgrading. These infrastructure providers have a ton of things they have to do, like checks and balances that they have to do to make sure that they upgrade correctly.
And would the client like have a list? Would they know like, Binance is running this version of this client?
Well, I guess not necessarily an intricate list, but they would know to contact the biggest players, right? So the exchanges, Infura, there's Alchemy, there's like the Graph, there's a few other ones that are big providers that you just give them a heads up. So I think that's what's going to happen going forward. But yeah, at the end of the day, like with most things, it was a communications issue.
It's so Ethereum, isn't it? Like critical bug, we fixed it, but we didn't tell anyone because we couldn't. And it kind of, the Bitcoiners make fun of Ethereum, but it's so bleeding edge that these things keep happening. And you just kind of trying to keep this train on the tracks as it just hurtles down there. But it seems to be doing it every time we come off better and stronger. So,
Yeah, I did want to note quickly as well that, this isn't unique to Ethereum. This is how blockchains work in general. Bitcoin also relies on infrastructure providers like this, and there have been instances of this happening in Bitcoin as well. Um, not in the same way, but there was an instance where a bug was accidentally introduced in a client upgrade that could have led to an inflation bug with Bitcoin if it wasn't caught and if it was exploited. And that was fixed and everything. But doing like protocol work on these things is extremely hard. It's extremely specialized, and when you're dealing with billions of dollars, you want to be as slow as you can and meticulous as you can. But sometimes things slip through the cracks, and you just hope that it doesn't blow up, right? And you hope that it's like a small thing where we can recover from, which Ethereum has gotten lucky with, I think, many times with this. But yeah, I wouldn't say it's anything malicious. It's just it's hard stuff to do. It's very hard.
that would be such a massive debate if there was an inflation bug on Bitcoin and it got exploited and they had to hard fork to do what Ethereum did around the DAO. That would be the ultimate debate. Okay, so let's dive into a bit of this CeFi, centralized versus decentralized finance, because one thing I've found super fascinating is the path that projects like Maker have gone, where they've incorporated USDC, these regulated coins, or even like wrapped Bitcoin. You can say that it's a centralized custodian that holds the Bitcoin. So there's a lot of DeFi now that is built on top of CeFi, and I just kind of worry, like, what if something happens, or what if coins get seized and all of a sudden it's not backed one for one? What are your thoughts on all that, Anthony?
Yeah, so Maker has definitely come under fire for this from people. It's like, if DAI is backed by 40% USDC, then, is that really decentralized, right? Because it could lose 40% of its backing overnight if Coinbase was compelled by a regulatory body to shut this down. And I sympathize with those arguments. But at the same time, I think, the arguments that Maker put forward is that they need to incorporate all types of collateral for scale for DAI. They can't just rely on ETH, which, I can agree with for sure. As much as I like being an ETH purist, the ETH's market cap is not that high right now compared to other forms of collateral. Not everyone holds ETH, right? They might hold Bitcoin, not ETH, and they want to use their Bitcoin with Maker. And then on top of that, if say there's like hundreds of different collateral types, then ideally they all don't account for much of the backing of Maker. So you would actually like decentralize out the collateral. That's I think kind of the angle. But at the same time, it depends on like the risk factors and how much of that collateral is backing Maker. So if it's still like, say you have like 100 different assets backing Maker, but it's still like 40% USDC, then it doesn't really change anything, right? Like, you're not decentralizing anything. You still have a central point of failure. So it remains to be seen how that plays out. But I think it's always going to centralize to the top collateral types, because most people hold ETH, Bitcoin, or stablecoins, right? The other coins that they hold, they might not want to even use as collateral because they're so volatile that you can't even take out a position without like having a huge liquidation ratio, and your capital efficiency is down. There's a lot of things to consider here. I wish that Maker may have moved a bit slower here, because now they're in a position where it's I think it is 40% backed by USDC right now, which is quite crazy.
Yeah, at one point there was more than ETH. And as you say, if you went down the 40 path, then it's like, well, do we have the liquidity if we need to shut these positions down? So we're kind of in the position now where the Synthetics SUSD is the most decentralized stablecoin, would you say?
I mean, I love Synthetics as a project, but they still have God mode over their protocol, right?
Yeah.
They can freeze the protocol at any time, which they're transparent about, and they're moving away from that with the DAOs. But if you were to say what's the most decentralized stablecoin right now, I'd actually still think it's DAI, just because DAI doesn't have that God mode, admin key, for example. Even though it's backed by a lot of these things, it's still backed by ETH and a lot of ETH as well. It's hard. Like, the decentralized spectrum here is weird as well, because it's like, what are the chances that the Synthetics team executes their admin key to destroy SUSD? Well, the chances are very low on that, right? Like, almost non-existent. Versus what are the chances that Coinbase freezes the USDC in Maker? Probably higher, I would say.
What about Haven, the privacy stablecoin? Do you know what
I,
stage they're at with the keys and all that?
no, no, I haven't really paid attention to that one. No, I
Okay.
know there's a bunch of others, like there's empty set dollar now as well, like ESD that's come out. There's a lot of stable coins,
Well, there was a
and
there was a big
it's
hack, wasn't there, on was it OUSD?
OUSD. Yeah, correct. Yeah, there was a hack there. Actually, I can't remember off the top of my head what happened there, but that stablecoin basically depegged to like 10 cents or something because of it.
I think were they the ones that just said how secure they were, or was that another project that was?
There was another project I think called Value DeFi or something that was
Oh
bragging about
yeah,
how secure they were, and then I
they
don't know
got
if it was
hacked.
them, but there was one project doing it, and then they got hacked.
Yes, there's been a lot of hacks again this month, and I think some like exchanges are getting pretty sick of this, and it is frustrating when we keep like, why do we keep seeing this? Why isn't there kind of this threshold or auditing? One of them did get audited, but then changed the code. It's just like, oh, we're lucky we haven't got a worse reputation, to be honest.
I think it's simply just like what comes with the territory, right? If anyone can build financial products on top of Ethereum at any time with with all the freedom that they want, like no one's forcing them to get an audit, right? No one's forcing them to formally verify their code. All that's happening is that they're putting a smart contract out there. They're telling people, hey, come put your money here, you'll earn X amount, and people do it, right? We saw this play out like much more greatly in the DeFi summer, in the DeFi boom, the I guess the Ponzi yield farming boom with the food Ponzi's.
Yes.
People will chase those gains, right? And they won't really think about the risks. So for like the way I approach it is, I don't put my money into pickle finance, like not to insult that project, but I mean, I know that it's less secure than something like Yearn, for example, right? I know that it's less secure than some of the bigger DeFi protocols and stuff. So it's all about managing your own risk and, as you say, doing your own research. Because if you just say, okay, I'm going to put my money into this protocol that just went live, you're taking so much risk with your capital doing that because it's new. And you don't know if there's a backdoor, you don't know what's going on, you don't know if there's an exploit in there. So it's really about managing your own risk, I think.
Yeah. See, I did a lot of research on Pickle, and I quite like them, so I was more comfortable after doing all that, which is a good segue into Yearn. So Yearn Wi-Fi is a powerhouse. I love this project, and everyone thought it's dead, and that I was shilling it and whatever. I think they've bounced back super strong. They've partnered up, and well, I'm not sure what the wording they've used, but with Pickle and Cream to stop like duplication because they're working on similar things, but they haven't merged tokens. So it's kind of like they're working together now, but they're still going to have the little tokens for separate things.
Yeah, these mergers and acquisitions that Yearn is doing is quite funny because they're not actually, acquiring them. If these projects still have their own token, then it's still, separate to an extent. So I actually, I would have liked, if they said, okay, we're acquiring Pickle Finance, the Pickle token is going to be, we're going to get rid of it or whatever. I know that they obviously couldn't do that because there's holders of the Pickle token and things like that. That would complicate things.
Yeah.
But it doesn't. It just seems like partnerships to me. It's like, hey, we'll bring you into the Yearn family, right? Your protocol will be closely, associated with Yearn, but you can still keep your token, which I thought was a bit weird. I wouldn't really call it a merger or acquisition. I'd call it like a partnership more than that, to be honest.
Yeah, I'm going to be interested to see where they go and how they give it utility as well. Um, Final thing on stablecoins, Venezuela and Circle. So working with USDC to get around sanctions, to get these funds to healthcare workers, which would have otherwise been blocked by the government this time, instead of the government getting around sanctions using Bitcoin like we saw. So there's some interesting stuff going on in the world of stablecoins. Um, Look, I know people like always say that I'm ripping on XRP, and XRP's been on fire lately, and I've been happy to trade it. But I feel like there's just so many of these other things happening now, that are just gaining traction and market share. They're bringing themselves in the conversation that never really set out to, and now they're being used by central banks and governments.
Yeah, I mean, it's a funny thing whenever you talk about XRP and Ripple and whatnot. I think the honest question people that are following this stuff and maybe believe in the XRP vision or whatever have the honest question they have to ask themselves is that XRP was sold as a bridge currency for these central banks, right, and these other banks to send to each other. Now, why would they use that instead of a stable coin, especially a US dollar stable coin? That's just the fundamental question for me. Why use a volatile asset that is, that a lot of the supply is controlled by one party, rather than issuing your own, central bank digital currency or whatever, using dollars, stable dollars to transfer value. That's what it is for me. Like I'm not going to go into like the whole Ripple and XRP thing, but I don't see why anyone would use XRP instead of just US crypto dollars, right? It just doesn't make any sense.
I don't see why a bank would buy $1 billion of something when they can issue their own for free either. But
Yeah,
yeah, we
yeah.
won't go into that today. Next up here, I've got, so we just mentioned all those hacks. Nexus Mutual have been making some subtle changes, but another one called Cover has kind of come onto the scene, and they had their first payout, I think, just this week.
Yeah, I think they paid out from the pickle exploit,
Yes.
which was cool to see. But yeah, the insurance space is actually heating up a bit. There's more competitors coming to market, and I actually think this is a reaction to Nexus Mutual being such a closed platform, right? Where you have to KYC. It's not very composable within DeFi. Not to say it's a bad project or anything, but when you leave a kind of opening, other projects are going to come in and be like, "Well, we're going to do better than you," right? I think Yearn was even toying with this, and I think Cover might be the protocol that they partner with eventually or something like that, because there's some close ties there. But yeah, definitely heating up, and we're getting more toys to play with in the insurance space.
I think Yearn are still working with Nexus Mutual to underwrite their stuff as well. But yeah, they've kind of, yeah, you're right. They've wall-gardened off. I think they were actually a security token. You had to do the full KYC. And then we had the wrapped Nexus Mutual, but that didn't solve all the problems. So super important. Whoever captures that market share is going to do very well. But lots of competitors now. Andre, speaking of Yearn, launched Deriswap, which is all my favorites. So options, futures. I can't wait to see what he does there. But there's been a lot of that get the attention of speculators and the news and everything this month. So we've seen like Hedgig, Open, so many options and futures platforms that are, synthetics have got their inverse oil and oil contracts. There's awesome stuff out there being traded now.
Yeah, yeah. Deriswap's an interesting thing as well, because what Andre's trying to build with that is basically he's trying to make it so that you can do everything in one smart contract. So it's much more capital efficient because all the liquidity is pulled together. The risks are theoretically, less because it's just one contract instead of a bunch of them and everything like that. Honestly, if he can pull this off and make this work, it is one of the biggest things that would happen to DeFi in a long time, because you could just have this one massive pool of capital where people can do a ton of different things in. It's like having an Olympic-sized swimming pool instead of like your backyard swimming pool, right? Where you can just do much more with much more space.
So one of the coolest things that I got excited about back in, I think it was 2014 or 15, was Reggie Middleton and Veritasium, and he sold this idea that the platform they were going to build, it was like full on this DeFi idea that we call it now. So he was saying, if you want to trade Apple shares against Google shares, you just make that synthetic pair yourself. And obviously they didn't pull any of that off and it was a disaster. But this is kind of what Andre is talking about now. So along with like this idea of that synthetics just uses synthetic assets and like Chainlink as an oracle to get the price. Once you just know like the price of something and what you want to trade and then trade against something else, you just kind of make this synthetic thing that you trade. And I just love that the sky's the limit. That's so much different to traditional finance.
Yeah, yeah. I mean, I don't think that most people have even thought about what's possible yet, and we're going to see so much more stuff come out. It's just because it's so open and permissionless, and it can move so much faster than the traditional finance system. There's going to be products for everything. You'll be able to speculate on absolutely anything you want to.
And you think about that now, like in the traditional world of Wall Street, if you gotta ring up a broker and say, hey, I need like this special futures contract for this amount, this much coffee, and it's they've got to try and find a price and then some liquidity, and then they want to insure and hedge against it. So you can kind of just get rid of all that, and again, it becomes peer to peer. You throw it out there to the world, the market, and then you start to see people determine the odds. It's just democratizing finance, like Mike Novogratz and I chatted about the other day. Others, competition-wise here, I think Sushi's surprised people. Again, one that I got accused of shilling a lot, but they're doing a third of Uniswap's volume now. They announced super exciting updates that they're doing altcoin paired leverage trading, so starting to get into that more exotic stuff as well. They've got heaps happening. They've got plenty of developers that are working super hard. And again, I think some people are just kind of they got left with a bad taste, pardon the pun, from all the other stuff that was really crap. But now there's a few of these like Wi-Fi and Sushi and like Balancer, Curve that are kind of making a bit of a bounce back.
Yeah, I mean, I've been pretty vocal about my distaste, pardon the pun, for SushiSwap in the past. But I got to give credit where it's due. They are definitely building a lot of cool things right now, and I think they played it really smart by basically, once the uni farming ended, they said, "Hey, everyone, uni farming's over, but you can come farm on SushiSwap now and earn sushi."
Yeah.
And that obviously did wonders for the price because the liquidity and TVL went up and everything like that. And they've bounced back quite strongly now, I think. So definitely agree with you that if they built something, a bunch of things like during, I guess, the DeFi bear, right, and they finally showcased it, and now they're kind of like experiencing the fruits of that labor. But yeah, it still remains to be seen because as we see, liquidity is not loyal. It's just going to go wherever it can make the most money. If the sushi rewards stop, is it going to go back to Uniswap? Is it going to go to another platform? We don't really know. So I think that it's probably going to take years to see who the winners are in this space, and it's still not, it's still not like, as much as I love Uniswap, they still have a chance to be usurped if they don't play their cards right. Like,
Yes.
but Uniswap V3 is coming out soon. We'll see what that does. Maybe that's like, as magical as we've been led to believe it is. It's just,
Did you see I put out the Uniswap Layer 2 test thing the other day? I had to play around with it. It was very easy
No,
to use.
I didn't see it actually. No, was that a legit thing from Uniswap?
So they've built
Oh,
on
the
top
Arbiswap thing, you mean, from
Arbiswap.
Arbitrum?
Arbiswap,
Yes,
yeah.
yeah. I did see that. Yeah, it was like a clone of Uniswap on Arbitrum, which is Off-Chain Labs' layer two solution there. Yeah.
Yeah. What's the saying? Liquidity locusts lack loyalty.
Hmm.
And speaking of which, Bancor. So that's another one that's kind of come back from the dead that are doing single-sided markets. So you don't have to do the old pairs. You can only put in one token, and that's going to be attractive for people. They've seen their total value locked explode as well. So there's plenty of money floating around at the moment getting these tokens.
Yeah. I guess you just gotta, watch the builders, right? Like a lot of people, when they see projects and they haven't heard about them in a little while, they're like, "Oh, is this project dead?" Right? Go join the Discord and check out if they're dead or not. That's where you'll find out, like, the community. You'll see what they're building. You'll see how active they are. Just because you're not hearing about it doesn't mean that nothing's happening. And sometimes that's done for strategic reasons as well. It's like you don't want to cause, you don't want to make noise about your project until you have something to show off, until people can get excited about something. So definitely that's where the alpha is, I think, in this space is keeping on top of projects that other people think are dead.
Oh, absolutely. Like boring projects has been some of our best investments, apart from obviously Tron. They go at the other end of the spectrum there. I want to finish off by just talking about a few of these index products because I love this type of stuff, like ETF style investing. And we've seen the DeFi Pulse Index. That's built on the Index Coop that you're kind of involved with through token sets. We've got the guys at PyDAO where you can create the little sort of baskets, Balancer. There's a lot of these that are starting to come out now where you can kind of design your own products. And I'm super keen to get a gaming one going, for example. So I think there's going to be big interest there.
Yeah. I mean, as you said, I'm involved with the DeFi Pulse Index as part of the Index Co-op at the moment, which is built on token sets or set protocol. So, I think I definitely agree with you. There's going to be broad appeal for these index products as we get more of the traditional, I guess, like finance system on board, right? And more users that are used to these products. So, for example, traditional investors will, just buy the S&P 500 or the NASDAQ or something, and then they come into DeFi and they're like, "Where's the DeFi index, right? Why can't I buy a DeFi index? Why do I have to go buy all these individual things that they have no idea about, mind you, right? They may know that DeFi is big, but then they go and look at YFI, like what's YFI, right? What's SNX? What's all these other tokens? So that's why I think indexes are a huge thing for these people you can just say, just buy the index, right? It's huge in traditional finance. BlackRock and Vanguard have like $15 trillion of combined assets under management. So that's why I guess we're focusing on it, because we saw that there's a market need there. There's other ones, obviously, as you mentioned, like PieDAO that use Balancer and things like that too. So yeah, I think that it's come at the perfect time. Like, these products probably wouldn't have worked in a bear market when it was just like the hardcore crypto natives, right, who know what these things are. But if we want to expand this thing out to like hundreds of millions, billions of users, you need to give them what they're familiar with. You can't just force them to adopt things that that us in the ecosystem are familiar with.
Yeah, and so many people just want exposure to that theme. Like, the DeFi index on FTX is going really well, and that's why I think DeFi is coming for the CeFi version of that. But yeah, some people just go, oh, I agree that gaming is going to be big, but I can't do the research and pick the individual coins. And that's where there's just going to be all this money get thrown at it. It becomes a self-fulfilling prophecy. And it's kind of what's led to bubbles in the traditional market, that they're just, everyone's going to these ETFs. Every ETF's got Apple in it, and then Apple just goes up insane amounts in price. So it's actually going to be really healthy for all these DeFi coins, because they're all going to be having all this money come into them, hopefully through the DeFi pipes. So through, like Uniswap or Kyber 0x, whatever it is. Yeah, I just love where it's all heading. It's just these special combination of ingredients that makes this bull market just so much bigger and more exciting.
Yeah, and that's another good point as well, is that, things like the DeFi Pulse Index and the PieDAO indexes, they actually buy and hold the underlying assets. They're not a derivative or anything. They actually, every time someone buys a DeFi Pulse Index, that'll go out and buy the other tokens. Every time it gets minted, it buys the tokens from the market. And that means the DeFi Pulse Index is actually one of the top holders of some tokens like YFI and Aave. And, and this brings up the whole concept as well of meta governance, where the DeFi Pulse Index can actually govern these other protocols with the assets it has as well.
Yes.
So there's so many cool things that can be done in the crypto native space, but that is enabled by the capital coming in from the space that doesn't really want to be in the weeds, right? They just want exposure. So we have like some really, really cool things going on in that space for sure.
And can you imagine if every time an investor went and bought a gold or silver ETF that, you could see to that level of transparency that there was real metal being bought or sold? Like, it's just the complete opposite to Fort Knox and does China have this amount? So I think we're going to get to a point in future, because people aren't trusting each other. Government, geopolitics, Venezuela can't get their gold back home on shore. So you go to a place where you can have, transparent backed or you can have the old legacy finance version that's a derivative, that's not backed, that's got 3 claims to it, that's in a country that you don't know or trust. Like, it's going to be so much clearer and better, the new system. And that just takes time. But, we'll sit here in 5-10 years time when we're doing our monthly episode, Anthony, and say, see, told you so.
Yeah, exactly. I think, it's just going to take time, like anything, to adopt. And I think it's coming, especially when, these index products get on centralized exchanges and everyday users can trade them without having to venture into DeFi. It's going to be huge, I think.
That's probably just the final point to wrap up, because this has been a long one. But just like we saw Binance and FTX kind of like hustle to list all these DeFi coins, all these exotic instruments are just going to be, ERC20 or 721. They're all going to be listable. So the big exchanges are going to have to start to, serve and give people what they want. So it's just a big circle that's going to feed on itself. I love it. That's been a long one. Any final thoughts, Anthony?
I guess I just realized we didn't mention anything about ETH2, even though that was huge this month, right? We had the deposit contract actually reach the minimum ETH required in time, which to me, like, I actually got a little bit emotional about this, because it was such a long time coming, and to see the community come together in such a big way where they reached this minimum and they sent a strong signal that, we're going to launch ETH2 on December 1st, right? The first phase of ETH2 on December 1st. It was just awesome, right? And we have so many people like interested in staking now, and there's people asking me questions all the time about it and getting really excited about it. So it's just, I mean, we've spoken about, like, for however long we just spoke about everything else happening on Ethereum. We didn't even touch on ETH2 until now. So it's just crazy how much is happening right now.
I think we've touched on it in previous episodes a little bit, but I do probably want to mention that I think next week or the one after, our Ethereum documentary that we filmed with Real Vision will be out. So I'm not sure if this is just going to be for their members and our members first, and then public and free for everyone a couple of weeks after. But yeah, but it's coming out very soon. It's going to be three-parter. It's going to be massive. It dives into ETH2 in depth as well. So, oh, this is just perfect timing. This documentary coming out when hopefully ETH's breaking $800 or something.
Yeah, exactly. I'm keen to see that as well. I saw that you got involved there, and I actually think that's really cool because that's a different audience to what we're normally exposed to, and that's what we have to be doing now. We need to be evangelizing this stuff outside of the crypto space and getting these new people in because we've built this amazing system. Let's show it off to the world.
100%. And it's just that understanding. So that's been awesome, Anthony. Great to catch up. Hope you guys have enjoyed that one, and we'll see you next month. Cheers.
Awesome. Thanks, everyone. Bye.